There we go. Good evening, traders, and welcome to today's masterclass titled Survival First, the risk rules every trader must know. Not should know, must know. My name is Francois. I'm your market analyst here at ATFX Africa, and well, it is great to have you all back, especially after, all the sessions that we've had thus far, yesterday's live, and all the other things that are coming up. Tomorrow's live as well, by the way, if you guys want to join me for that. So, yeah, we will have a live market brief and analysis session tomorrow morning as well. So please come and join me for that too. Now, today we are going to take a step back from all the advanced techniques and various trading strategies, etc., that we have been covering up until this point, and we are going to be focusing on risk management. Okay? And I titled this Risk Management for Beginners, but I truly believe actually this is risk management for every trader, because even if you've been trading for 5 years, during this session today, you might actually find something, maybe not all of it, but something that you are currently doing wrong, okay, in your trading, and maybe it's the reason why you're not profitable or not as profitable as you would want to be. So, whether you have been trading for months, for years, or you've never traded at all, or you're someone who has traded without understanding how risk actually works, this is kind of the session for that. Okay, so as always, please remember that everything that I will be sharing during the session is not financial advice. Everything is for informational purposes. And yeah, I hope the information that you will receive here today will educate you, and you will be able to take that forth and apply the principles in your own trading. So during this session, we will be covering a few things, and we're going to be explaining a few things. And first things we're going to do is explain how do you think about risk management when you're trading, whether you're new or experienced. How do you avoid blowing accounts? Very, very important one on number 2 on, having too much exposure. How do you know where to enter, when to enter, and at what price? How do you build a simple, realistic risk plan from day one? And if you've been doing this for a few years, tomorrow can be day one. So let me kick things off in this regard. I'm seeing I have quite a few hellos and all that kind of stuff in the comment section. I'm loving it. Thank you so much. And please keep them coming. But let me know, how long have you been trading? So if you're watching this video, whether you're watching the recording or the live, okay, how long have you been trading? Are you brand new? Are you 1 to 6 months? Are you 6 months to a year? Are you more than a year? Let me know in the comment section, okay? While you guys send me that message, just something that I want to add. I have prepared, I think, way too many notes for tonight's session, and we might have to do tonight's session in 2 parts. I'm going to do my absolute best to get through this session in 1 hour. But if I don't, or if I see we get to the halfway mark, because I know more or less where the halfway mark is on my notes as well. So if we get to the halfway mark and time's starting to run out, I'm going to cut the session for today, and next week, Wednesday, we'll do a part 2. Because when it comes to risk management and understanding everything about risk management, I feel like it's a core principle that we just cannot overlook. Okay? So I've got a 1 year, I've got more than a year, so I've got some experienced traders here today as well. So, and again, I think we have a lot more people attending here tonight than the comments I'm receiving, so please keep that coming. I'm loving the amount of likes that are coming through as well, so if you haven't liked yet, please remember to smash that like button. If you're unable to comment, it's because you haven't subscribed yet, so please remember to hit that subscribe button as well, and then you'll be able to participate and comment and so forth. So I want to kick things off tonight with why risk exists and why your plan matters. So let's talk about the one thing many traders, beginner or experienced, misunderstand, which is risk exists because markets move beyond our control. I mean, for instance, we're going to see the release of the NVIDIA earnings later this evening. Okay. Now, if you buy NVIDIA stock because you think it will go up, that is speculation. If it drops, that's the risk. So if you sell because you think it will fall, but it rises, that's risk. Now, you can hedge, you can diversify, you can analyze, but the one thing, so I'm going to repeat all of that. You can hedge your trades. You can diversify your trades. You can analyze as much as you want. These are all things within your control. But the one thing you cannot control is where the market goes. That's the simple truth. What you can control, though, is your exposure and your plan for trading. And that's why risk management is essential from day one. Not after 20 months. And if you've been trading for 20 months, I'm so sorry if you haven't really achieved what you set out to achieve. But let's make today your day one then. So, also, the wrong time to initiate a risk plan is after a big losing streak. You know, all these things, it hurts. So let's just do it from the beginning. Let's do it from day one, okay? And the biggest thing that we need to understand is risk management isn't just putting a stop loss somewhere, okay? It's part of it, but it's not all it is. It's also how much I'm risking. Is my plan mathematically sustainable? Are my profits and losses consistent? Is my exposure controlled? Is everything expected? And yes, I mean everything. Is everything expected? What do I mean by that? Professional traders don't say, wow, like, yeah, I didn't expect that loss. No, beginners do. And today we are going to fix that, okay? Trading becomes manageable only when nothing surprises you. Once nothing about your trading outcome surprises you, that's when you start achieving this beautiful level of elevation within your trading. So here's a question, and be honest. Have you ever taken a loss and said, wow, I didn't expect that loss to be that big? Let me know. Let's be honest. Pop it for me into the comment section. I've got a comment here that says, to be honest, I got that perspective from trading live and not on a demo account. I actually do love that comment because I have spoken about this in the past and I've elaborated on it quite extensively where I've stated, I'm personally not the biggest fan of demo accounts. And the reason why is I believe demo accounts are used incorrectly. A demo account, in my opinion, is there for the following reasons. If you are brand new to trading, a demo account should teach you how to place a trade, how to place a stop loss, how to place a take profit, the basics. If you are testing out a new trading strategy for like 3 days, test it on a demo account. Okay? That's what the demo account is there for. Demo accounts are not there to learn you or to teach you how to trade. Because at the end of the day, demo accounts cannot captivate the emotion that is experienced when trading live. I hope that makes sense. I'm still waiting for responses on whether or not you've taken a loss and said, wow, I didn't expect that loss to be that big. And if it's never happened to you, let me know. Tell me, Francois, never, ever has that happened to me. Okay. That being said, let's move on. Like I said, got a lot of notes. So I need to get through all of this. So, what does risk management really aim to achieve? When we speak about the aim of risk management, many traders immediately think, limit my losses, reduce my risk, and spread risk, which are all correct. Okay, so yes, but that's only the surface. Risk management has deeper goals, and newbie traders rarely understand them. And this is what I want to elaborate on tonight. So, you've all seen that picture of the iceberg where it's like 20% above water and the 80% below the water. And, if you think of risk management and you're thinking just stop losses, reduce risk, and spread risk, you're the 20%. Like, you haven't really grasped what risk management truly is. Because at its core, risk management is ensuring exposure is not a threat. This one is the biggest issue I have seen in all my years of coaching. Traders open a few positions. And what I mean by a few is literally like 2 or 3. Okay? And then all of a sudden, margin call, margin level in danger, account under pressure. Traders, this should never, ever happen. That means your exposure was uncontrolled. Okay. Number 2, ensuring your plan is mathematically sustainable. And yes, risk management is math. Okay? Not emotions, not hope, not predictions. It's looking at your numbers and asking, based on my trading style, based on my history, based on my performance, what is mathematically required for me to become profitable? That's it. Even if you aren't the best at analyzing charts, so if your analysis is weak, even if you cannot yet accurately predict direction, your math can still save you. Number 3, 0 unexpected outcomes. This is a big one. No trader should ever say, wow, I earned more than I expected. That was a really profitable trade. I didn't expect to make so much money. Really? So what did you do before entering the trade? Did you actually think about what you were doing? Or, on the other end, I lost way more than I thought I would. If your profits exceed expectations, that means risk could have been exceeding expectations too. Unexpected losses and unexpected profits are both red flags. And then we have number 4. Ensuring your knowledge grows. A trader on, what options do we have here? 6 months. Now, a trader on 6 months should not have the same 50% performance as they did on month 1. If you do, something is wrong with your exposure, your consistency, and your learning structure. You are not growing. You are not moving forward. And then last, number 5. Identifying risk before opening a trade. I cannot say this enough. Most traders identify risk after their trade goes bad. Then you're like, oh wow, yeah, now I can see that lot size was a little big. You think? Professional traders identify risk before clicking the buy or sell button. Okay? Literally, I would look at my charts, I would calculate everything, where my stop loss going to be, what that would be percentage-wise of my account, where my take profit will be. I do all of this before even thinking of entering the trade. So, I hope this session will show you the exact way to do that. And if it's only that, I'll be happy with that. I have another question for you guys. But before I ask, I'm going to read the answers to the previous one. So, there is no fear with fake money. 100%. Okay? Monopoly money does not raise my blood pressure. Real money does. So, I agree fully on that. I haven't had that experience of a bigger loss than expected. Wow. Well done. I like that. Capital Pup, good evening. Welcome. Thank you for being here. I check my risk every first before placing my order. Well done. Well done. Okay. Said I had a question, right? So, have you ever opened several trades? So not just one, like several. And then suddenly realized your margin was in danger. You dropped under 1,000%, maybe even worse, your account turned red. When MetaTrader starts flashing. Has this ever happened to you? Yes, no. Let me know. Moving on. Why do so many traders never really improve? And this is the sad part, I've sat with traders. And I've done this quite recently as well, where the trader will tell me, in my first month, I had a 45 to 50% win rate. Now I'm on month 6, and I still have a 45 to 50% win rate. I'm not learning anything new, or, nothing is progressing. And my answer to this is, let's look at your trading history. Let's look at your journal. Let's see what we find, and an example that I can think of, had this trader who literally had 20 to 25 charts open instead of just a few, traded different assets every day. There was no consistency. I mean, 5 days a week, I'm trading S&P 500. 5 days a week, I'm trading gold. Yes, on my other pairs, I can identify some long-term setups that I would like to take, but my day trades, my meats and potatoes, the core to my trading profits, that's consistent. That's an everyday thing. That is me there on charts. When I'm on desk, that's where I make my money. And if I now start opening hundreds of charts, what am I doing? I'm dividing my attention. I'm kind of killing myself here, Plus, know when you should trade. I normally trade about an hour after the UK session, all the way till about 2 hours after the US session. That's my trading space. I have friends who trade Asian session, but again, know when you need to trade. And a lot of these traders I'm seeing, not just trading different assets every day, but they're trading at different times. Like today I'm trading New York. Tomorrow I'm trading London. The next day I'm trading Tokyo. Pick a time zone, guys. Okay? And I know I'm probably being a little dramatic tonight, but it's just something that is a little frustrating. Okay? And sometimes you'll trade news. Sometimes you don't. In essence, you should always be trading news because news is what drives the market. Sometimes you will hold a trade overnight. Sometimes you don't. My question always is this part of your trading plan? One day they want a scalp trade. The next trader they want a day trade. Then they want a swing trade. Pick a trading style. Okay? If you are trading with no pattern, no structure, no consistency, and you are wondering why you are not improving, it's because your behavior is inconsistent. Your results will be inconsistent. And if your results are inconsistent, how can you learn from them? Learning requires patterns. Patterns requires consistency. Consistency requires risk rules. Traders fail not because they are bad traders, but they fail because they are inconsistent traders. The goal of tonight's masterclass is to give you structure so you can actually learn from your trading. And with that being said, I want to know, do you currently trade, many assets? Okay? And when I say many, I mean like 5 plus. Or do you focus on 1 or 2? Let me know. Let me see what I have here. Yes, my very first 5 trades. Okay. Trade only when you risk the least. I couldn't agree more. Wow, I did not realize that. I understand. Thank you. You're welcome. About the trading sessions, how interesting. When people start learning these smaller things, gets me excited. Yeah, we are definitely, most probably doing a part 2 on this. I don't know. I'm getting way too excited and time's running. So let's move on then. Why statistics matter more than predictions. Here's one of the most surprising truths for traders. You do not need to be a great analyst to survive in the market. So I'm just going to take the slide off for a second. I'm going to say that again. You do not have to be great at analysis to survive in the market. You can be successful even if your analysis is not the most accurate yet. Even if you can't properly determine direction. How? Through math, statistics, and risk structure. Because your statistics will tell you how many trades you've won, how many trades you've lost, your average win rate, your average losing rate, whether your behavior is logical, whether your risk is controlled. What must change for you to be profitable? And you want to know the most beautiful thing about having that mathematical approach? Numbers don't lie. If your losses are too big, the data will tell you. If your wins are too small, the data will tell you. If your exposure is too high, the data will tell you. And if your behavior is inconsistent, the data will tell you. This means zero guesswork, zero predictions, just numbers. And I started this by saying, if your analysis isn't perfect yet, you can actually still be profitable. Do you want to know what the opposite side of that coin is? You can be the best analyst on this planet. If your risk management is not what it should be, you're not going to be profitable. And I've said this to so many people where I've said, you cannot out-trade bad risk management. But with good risk management, even a bad trader can be profitable. Weird, right? So we spoke about zero guesswork, zero predictions, just numbers. So tell me, do you currently review your trading statistics each month? Or do you focus only on what's in front of you, individual trades? And I'm hoping to get a whole bunch of, I focus on my stats. Because that's where the important part comes in. So let me know, please. I look forward to your responses. I am learning, thank you. Part 2 is welcome. Okay, can't agree more. Beautiful. Whew. So let's continue by addressing one of the biggest issues I see in new traders: inconsistent behavior. think back to that example we mentioned a little bit earlier. Month 1, 45 to 50% win rate. Month 6, still 45 to 50% win rate. Not improving. And it's not that you're not improving because you're bad at trading. It's because you trade everything, everywhere, every time. I think that's the easiest way I can put it. That's why I normally say, pick your poison. Pick what you want to trade. You cannot be trading everything, everywhere, every time. A lot of times I come into, I'm on desk at 6 o'clock in the morning and I'll see a setup and I'll be like, wow, that's cool. What do? I'll just document it. Okay. Do I take the setup? Absolutely not. Why? Not part of my plan. It's not part of my trading time. I don't trade 6 o'clock in the morning. I trade at 11. So I'm not there yet. Okay? And the reason why this happens is because you're trading with no structure, no pattern, no routine. And the better you get at this, those have to be your core fundamentals. Structure, pattern, routine. Okay? No environment where learning can take place consists of no structure, no pattern, and no routine. So here's the tough truth. If your approach to trading changes every day, your brain has nothing to learn from. You cannot develop skills if you trade different assets every single day, different time frames every single day, different sessions every single day, with and without news, random holding times, random lot sizes. You simply cannot measure improvement because the variables are changing consistently. Professional traders simplify their environment as much as humanly possible. Why? So they can study it. Consistency allows you to say, when I trade asset X in session Y using method Z, this is my result. Consistency makes progress visible. Randomness hides progress. And today we are here to fix that. Random question. What do you guys like to trade? What's your main instrument? What's that one thing that you look at every single day? Let me know in the comments. I focus on individual. How do I check for my stats? Okay. Valid question. Your stats is something that you need to track through your own trading journal. So you can pull your stats by doing, and this is a higher overview of your stats, by pulling a MetaTrader report. So when you go to your trades, you can right click, you can say generate report, and it will actually generate you a PDF. If you scroll right to the bottom of the PDF, there'll be basic stats. Okay. How many trades have you entered? How many were buys? How many were sells? What's your average profit? What's your average loss? All those stats are already available to you just by simply drawing a MetaTrader report. Okay. But by you keeping a trading journal, you can go in depth on that report. So And again, this will help you to analyze everything and to get better at what you are doing. FX Beast, I hope that answers your question. And Rocast, I see you answered something very similar to FX Beast, and I really hope after tonight's session, we will do the effort to check our stats so that we can actually have data to improve ourselves. You know, as traders, we are always looking for data on charts, but we never create charts about ourselves. And if you start creating charts about yourself, magic happens. So let's talk a little bit about exposure. One of the biggest and most dangerous mistakes beginners make. And I've heard this so many times where traders come to me during a coaching session or during a seminar or even at expos, and they say, Francois, I opened a couple of trades and now my account is in danger. My margin is low. I got a margin call. Traders, this should never happen. Not once, not accidentally, not this one time. Never. Exposure is one thing that is fully, and I'm going to repeat that, exposure is one thing that is fully in your control. Opening margin or multiple positions may look harmless at first. You know, each trade on its own seems small. Why? I'm just opening a 0.02, you know, nothing big. But exposure stacks up really quickly. Risk compounds. And compounding is great, except when it comes to risk. Losses can multiply extremely fast. And margin can evaporate just like that. Exposure, not direction of the market. Exposure is what blows accounts. If your analysis is good, but you are overexposed, your account will suffer. This is why risk management begins with survival. And I have said this in multiple sessions. Your number one job as a trader is not to make money. Your number one job as a trader is to protect your capital, aka survival. Never open trades that together threaten your margin. Never stack positions without calculating the combined risk. Never open so many trades that one little spike wipes out your equity. Exposure is that quiet enemy. It's not dramatic until it's too late. So, tonight's rules are designed to eliminate that danger completely. And let's be honest for a second as well. Have you ever opened multiple trades, so, you know, barcoding or stacking, and then realized after you've opened all these trades on top of one another that your margin level dropped maybe more than expected? Maybe not into a danger zone yet, but more than expected. Let me know. I would love to hear from you. Thank you. We'll start checking stats too. Cool. Okay, we'll check stats. Perfect. This class, in my opinion, should be the very first chapter in your trading journey. I agree. And, maybe we can do something about that. So, let's talk a little bit about using mathematics instead of prediction. So, one of the most powerful ideas from today's session is this. You can be successful even if you're not the greatest analyst yet. And this surprises many traders, new or experienced. Because why? They think, if I just learn how to predict direction in the market, I will win. It makes sense. But prediction is only half the game. And often the smaller half of the game. Because your statistics tell you everything you need to know about your trading behavior. So, let's say, for example, you are, winning 50% of your trades and losing 50% of your trades. So you are a 50% accurate trader. If you enter a trade and people ask you, what do you think about your trade? You go, it's 50-50. So, and if you are still at 50-50 and you are wondering why you're not improving, the answer isn't just prediction. The answer is mathematics. Your statistics can tell you, are your losses bigger than your wins? Okay? So remember, we always want that the opposite way. And a lot of times we can fool ourselves into saying, my wins are bigger than my losses. Do you have the data to prove this? When you are in positions, are you overexposed? Are you entering at random times? Are you changing assets too often? Is your trading plan sustainable? What must change in your trading for you to break even or become profitable? Why? Because math doesn't lie. Emotion lies. Hope lies. But numbers? Never. And the best part is, you don't even need advanced trading tools or, some magic trading strategy. Your platform already gives you the data. So, and later in the session, which will now probably be part 2 of the session, we will go through exactly how to use your statistics to determine your required performance based only on one thing, your own history. No guessing, no prediction, just pure clarity. I hope that's making sense so far. I have only seen those type of stacked orders on YouTube clips. Let's keep it like that, please. I used to barcode trade on micro accounts. Okay. So as stated a little bit earlier, one of the biggest signs of poor risk management is when the outcome of the trade is unexpected, whether that's an unexpected positive or an unexpected negative. Both statements show a lack of structure, because if your profits are unexpectedly large, it means your losses could have been unexpectedly large too. And this is a massive problem. Now, as a question, do you think institutional traders at JP Morgan or Goldman Sachs or any major trading desk ever hear someone say, wow, I did not expect that to happen? You know, when we talk about the market, of course, we say that a lot. Okay. I did not expect that to happen. Last month, I did not expect not to have an NFP. This month, I did not expect it to happen again. That happened. But the outcome on my trades did not take me by surprise. And this is where you need to get to with your trades. Now, because they can, well, not because you can 100% with accuracy predict the market, but because you can control every variable around your risk. Nothing happens accidentally, by surprise. Everything is deliberate. That mindset is what you want to build on. We have to accept we cannot control direction in the market. Yes, we can apply analysis and we can predict it with the most accuracy possible, but we cannot control the direction. We cannot control volatility. Trump can tweet now. Market can go haywire. So in essence, we cannot control the market, but we can control our exposure, our risk per trade, our expected drawdown, our expected profits, our maximum acceptable loss, our consistency. And once you control these things, you remove surprises from trading. Predictability equals sustainability. And I'm going to finish with this last topic for tonight. You know, we're going for 48 minutes. I'm literally halfway. There's a lot of core principles and, you know, actionable insight that I want to share, but we're going to share that in part 2 next week. So, everything we have discussed so far leads to one central idea: survival first. Before you can aim for perfect entries, before you chase, you know, golden trading strategies or holy grail trading strategies, before you try to predict markets, your number one goal as a beginner is simply don't let your account die. Okay? That's it. Survival. Don't let your account die. Because you cannot improve if you are consistently resetting. Okay? And I've said this so many times. I've seen traders put in $100 and then blow the account. And next month, $100 and blow the account. And next month, $100 and blow the account. And next month, $100 and blow the account. And next month, $100. And they do this for years. And then they come to me. I've literally had seminars where people sit there and Francois, I've been trading for 5 years and I'm not profitable. And I'm sitting there like, what have you been doing for the last 5 years? And the thing, what they've been doing is every single month, reset, reset, reset. It's all that happens. Instead, if you are applying proper risk management, put in $100 this month. Grow it a little. Put in $100 next month. Now you have $200, $300, $400, $500. After a year, $1,200. Plus the little bits of profit that you've made. Maybe it's $2,000 then. And you are compounding this. And every single month you can add $100, maybe $200. After 2, 3, 4, 5 years, worst case scenario, you'll have at least $6,000 in an account. And if you've been growing that by small percentages the entire time, after 5 years, these are really big trading accounts that you can have. But we are more concerned about making profits than we are about letting our account die. And we are not focusing on the survival, and we are just resetting every single month. Resetting. If that's your mindset, you might as well take that $100 and go to a casino and go play roulette. At least they'll give you a free drink. You cannot learn if you are blowing accounts every single month. And you cannot develop experience if your environment changes every day. Your growth as a trader depends on your ability to stay in the market long enough to develop skill. Survival is not passive, it's active discipline. Controlling exposure because it keeps you safe. Understanding statistics keeps you informed. Removing unexpected outcomes keeps you stable. Consistency keeps you learning. And once survival is secured, then your skill can grow. Then your analysis can improve. Then your strategy can mature. But until that point, your focus must be survival. Let me know. What do you feel is currently stopping your trading from being consistent? Is it exposure, no structure, lack of statistics, emotional decisions? What is it? Is it something else? What do you feel is currently stopping your trading from being consistent? Let me know. Just to let you know, there seems to be a 5-second or more lag. Okay, yeah, I think the lag a little bit's due to the live, so that's okay. I'm training myself to keep reading the market like a storybook. Unique because it's written every second of every day. I like that. Quick question. Are you trading NFP live tomorrow? I will most probably. I usually do. I haven't scheduled a live for tomorrow yet, but just because as well, I'm very unsure about the outcome tomorrow. And what I mean by that is the market can either go nuts, and this could be the biggest NFP we've seen all year, or the market can do absolutely nothing. Both of these are options tomorrow. But if you guys want me to do a live tomorrow, I'll do a live tomorrow. Okay, so let me know. If you want me to do a live, I'll do a live. More than happy to do it. And guys, everything I do here from an educational perspective, it's only a pleasure. So thanks for the message. I appreciate it. I do think we're going to wrap up tonight's session. We'll come back next week with part 2. I wasn't expecting to have a part 2. But like I said, I prepared so many notes that I think a part 2 is essential. Because I don't want to keep you here for 2 hours. And I also want to go home. So, yeah, I think that wraps up tonight's session. I hope you learned something. I hope in some way I got through to you guys, even if it's just a little, you know. Yes, please do a live. Okay, cool. Okay, so I guess this is to my question about, being consistent. Sticking to one trading session like New York. I've been trading Asia, London, and New York. Now I will pick one and stick to it. Well done. Okay. An FX Beast, I'll do it live. Okay. So traders, thank you so much for joining me tonight. Thank you for being here. Like I said, I hope this was helpful. And I hope you found value. So, until next time, which is tomorrow morning. Now, please also remember, so then tomorrow I'm going to do 2 lives, I guess. We're going to have a live market brief in the morning, and then we'll have an NFP live in the afternoon. So, yep, come and join me for both lives tomorrow. So until then, stay sharp, stay focused, and trade smart. Have an absolutely blessed evening. Thank you so much, traders.